Welcome to this week's Money Metals podcast, helping gold and silver investors during these treacherous times. Now, here's this week's market wrap with commentary and analysis from the company voted 2015's Precious Metals Dealer of the Year in the U.S., Money Metals Exchange.
This is Mike Leeson with Money Metals Exchange, and it is my privilege now to be joined by Bo Polny of Gold2020Forecast.com. Bo was a real student of the markets and offers some fantastic technical analysis on the precious metals with his detailed market cycle work. Bo has made some important calls of major tops and major bottoms in recent years in the metals markets, and that's earned him a reputation as a great market timer and analyst. It's great to get a chance to talk to him today. Bo, thanks for joining us. How are you?
I'm great. Thanks, Mike. I appreciate you calling and setting up this interview, so thank you so much.
You're expecting some big things in the markets this year, and I want to get more into the specifics with you of all that in a moment. But first, in terms of precious metals, back in 2011 when gold reached nearly $1,900 and silver nearly $50 an ounce, you successfully called the top in those markets, and you sold your positions at what were ultimately the highs for both metals. But now you're saying that the bottom has been put in. You've been on record saying that several months ago, November of 14, and you're flashing a buy signal for gold and silver, saying it's time to get in. Now, we've heard from a number of forecasters who were calling for bottoms back in 2012, 2013, and this corrective period has certainly gone on longer than many of us would have expected. So why are you confident that we have seen those lows in the precious metals this time, and what is your research showing there? Talk about that.
Looking at timing of these events, off the top of 2011, in April, the very end of and the very first day of May, what ended up happening was silver topped out at $49. And then, since then, obviously it's dropped, and we went from 49 all the way down to a low of 14. Here's how cycles work. Probably the best place would be to start is talking about cycle work and how you can project a possibility of a low. It's called the law of sevens, okay? And so throughout nature, 7 replays itself over and over and over again. It's something that we are never taught in school, something no one talks about, but there's a law of sevens, and I just want to illustrate that to you before we can get into talking about bottoms in gold and silver. But a law of 7 basically talks about there's 7, cluster of 5 with a completion of 2. So that takes us to 5 plus 2 is 7. And then here's examples of that. The human skin has 7 layers, 2 inner, 1 outer. Cervical spine in the human spine the neck has 7 vertebrae, 2 that are movable, and then 5 that are fixed. You have 7 days of a week, 5 and 2. You have two days in the weekend. Rainbow has 5 primary colors and 2 bridge colors, but a total of 7. The sound, do, re, mi, fa, sol, la, di, do, goes back to do. There's 7 there. Oceans run in waves of 7. 7 cardinal signs, 7 hills of Rome, 7 wonders of the world, 7 oceans, 7 continents. My point is, if you take the 7 and you cut it in half, what do you have?
3.5.
3.5, okay? If you go to May 1st, 2011, 3.5 years, you know where you end up? November 1st. I did an interview right then, and I was basically saying this is 3.5 years exactly to the mark. Gold should be bottoming right here. Gold then dropped 48 hours later, hit a low at 11:30, and low is held to date. Through nature, it hit a low 42 months to the mark, exactly 3.5 years from the high. So why I'm saying that's a low is because that's a critical juncture in the cycle of sevens or halfway point. Further on, you take that point, and this even gets way more exciting because on cycle work, silver bottoms after gold. Okay, well, when did silver bottom? 3 to 4 weeks after November 6th, right on December 1st, the Swiss referendum, silver dropped to $14.14, I think, and then it reversed, all within one day. I'm sure we all remember that. But the silver low cyclically came in secondarily after gold. And then since then, silver and gold have gone up into January, but then have also come down and gone sideways. Now, what happened in 2011 after silver topped? Gold then went up to it was a specific amount of time window. There's a time frame that it went through. But then it went all the way into the end of August. And what happened in the end of August 2011? $1,900 gold.
Right. That's, I guess, the high that we saw in 1900, 1910, right in that range right there, correct?
Exactly. So that was a top in gold. Okay, now let's have some more fun. So the law of sevens, cut the 7 in half, 3.5, 42 months. The end of August, first day of September, is 42 months to the day right here. That's why I was actually wanted to make sure we had the interview here, because this is a very interesting time. So we should have had a low in gold. We should have now come off the low, had a low in silver a month later, created a wedge for the past 3 months, and now that we are officially completing the 3.5-year cycle off the 2011 gold top at 1,900, we are about to see some pretty fantastic moves as the wedge or the triangle breaks vertically for gold. I hope that answers your questions as to how I look at this timing, but it's relation to taking numbers and mathematically applying them to gold and silver.
And expanding on that a little bit, talk about the significance of 2020. You've got the gold 2020 forecast, of course. What's the significance of the year 2020 in that 7-year cycle work?
Well, what happened in 1980? We had a high in gold, right? Now, take 3 cycles of 7. You take 3 times 7, you know where you end up? Okay, what happened in 2001?
Yeah, that's where I guess we reached a market bottom in gold, right?
That's correct. We are 2 cycles through 3 7 cycles of 7. Okay, so gold in the year 2015 completes a secondary cycle of 7 to then embark on a third cycle of 7. There's no way the bull market is over in gold. This was nothing but a correction.
Turning here to the equities market, you're a follower of all markets, of course, and you look at the cycles in all of them. We have one asset class that's maybe ready to roll over, and after a nearly unprecedented and unabated advance over the last few years, when many people were suggesting that it was going to be nearing a top, it didn't. So what does your research tell you about the U.S. equities market?
Mike, I provided you a PDF layout, and I'm going to have a link to my webpage here shortly. But I think you've got it and might want to link it to this interview. However, in that update, it's dated the 24th of February, there is an S&P stock cycle that I laid out in there. And what it shows is a topping pattern that occurs on a 24-month window. So basically, using this chart, they're monthly candlesticks. And what the chart tends to indicate is that the U.S. equity markets have a topping pattern of 24 calendar months, which would be 2 years. If you look at the cycle, you'll notice that in 1998 was the start of the 24-month cycle pattern. It topped in 2000 and then crashed. You'll also notice that in 2006 was the start of the next one. That went up into 2007, and then we had the crash that followed that into the bottom of 2009. Since then, we've had the S&P and the U.S. markets move upwards, starting in 2013. So in 2013, that ran an entire 24 months, and as of now, that cycle itself should be complete. So the point is, if you look at the secondary chart on page 2, what you'll see is that when you compare the S&P against the U.S. dollar, the cycle is extremely much more apparent. But the point is that cycle is now indicating that the rollover phase should be here, and so we should be seeing equity markets reversing and going in the downwards direction. And from the day counts, again, I don't like to do day counts too much on the S&P or the U.S. markets, but I do believe that we could, starting even as early as next week, so the first week of March, start to see the equity markets rolling over.
Back in 2011, during the run-up in the metals, we had a gold-to-silver ratio in the low 30s, but now we're roughly 73-1 as we're talking now on Thursday. What do you expect to see in the ratio from here on out? Do you expect that to narrow in silver's favor?
Well, absolutely. You can go back in history. And there are many times that gold-silver ratio can get into the 60s or 70s, but it never ultimately stays there. The low number would come into the range of around 15, give or take. But at 70, you're talking, pretty substantially cheap silver. Bottom line, if you're going to be doing any kind of investing in the precious metals, my thought personally, which I believe in, would be to own silver first. When the ratio approaches smaller numbers, getting into maybe, say, 30 or even 40, then at that time you might want to look at never selling your precious metals, but swapping your silver and then flipping it in for gold, just because gold in the long term is a better deflationary hedge. And so if we're looking long term at the equities continue to falling eventually to the downside, in the years to come, which I personally foresee happening, I think gold long term would be a better investment. But in the short term, silver is definitely by far the trade of choice or the investment of choice.
Most of our listeners probably aren't necessarily market timers or traders. So in terms of the broader picture from a macro level, and you covered this just a moment ago, but why do you believe it's important for someone to have metals given the current financial and economic landscape? Because obviously things are maybe a little bit scary out there right now.
I just look at it as gold and silver have no counterparty risk. When you have it in your hand, you have it. Anything paper is paper. And so, at the end of the day, you either have something physical or you're owning paper. It doesn't matter if it's stock. It doesn't matter if it's SLV or GLD or if it's 401ks. Those are all paper entities versus gold. And my belief is that when you have aggressive price movement on gold and silver, what happens is I think it's going to be harder to get your hands on it, but more importantly is you're going to have large premium spreads. So, people that it's just to get your hands on it, right now the premium on gold might be $30, but, imagine gold going to $2,000 or $3,000, that spread's going to become, $200 possibly just to get your hands on the gold. So I honestly believe that I think it's much more prudent to have physical, for no counterparty risk, and secondly, just ability to have it, because I don't know how easy it might be later on to get it.
Most of the moves in precious metals bull markets occur in a short period of time. Talk about that. I guess we've got a mutual friend, David Morgan, who says that you see parabolic moves. The last 10% of the time period, I guess, accounts for 90% of the move or somewhere along those lines. Do you foresee that type of blow-off top happening at the metals in some point before it's all over?
Absolutely. I've been forecasting that we're going to see large prices in gold and silver, and I'm still saying that event's going to happen. You have to remember, we've had 42 months, 3.5 years. We've had half of a 7-year cycle of a bear. And this is critical to remember. When one cycle ends, a new cycle begins. The new cycle could be something that we're not used to. We could have very fast-changing prices just because it's been 3.5 years of low prices. So I still see the cycle coming to an end even this year, in other words, a big move still happening. And for that to happen, that would basically summarize what David Morgan has said, and that's kind of how we became friends, is if you look at 3.5 years, and then you have a massive move, well, and say in only 1 year, then that would make his statement 100% true.
Well, this is all incredibly interesting stuff. This whole 7-year cycle stuff is very fascinating, and it'll certainly be interesting to see how this all plays out. Well, Bo, before we let you go, tell our listeners how they can learn more about all this, your service, your website, and how they can follow the work you're doing there, and then also about the Polny 2020 Gold Index.
I look at it this way. Anybody who's invested in gold, I think it's critical for everybody to have at least an edge, and I believe the edge is timing. Is you can look at prices all you want, but if gold shoots up $100 or $200 or $300, you're going, well, should I sell or should I not sell, or if it's the bottom right now, should I be buying? And if you're just buying because you feel it's right, I think that's 100% great anyways, because the prices are so cheap, regardless. But the point is that when it starts to move, or more importantly, before it even starts to move, to know when to do something, when to act. If a top is coming in, or if there's a big rise like we spoke about, and prices start to go, pretty aggressively to the upside, how will you know when to do something about your position? And then so that's what the gold index is all about. It basically covers what we discussed here in greater detail, and more importantly is what I give is specific timing points. So there's actually a couple at this point, very important time points for 2015, and I think anybody invested in gold should be aware of those time points. And again, that's what we offer within the gold index, and then we also cover the equity markets in there as well too.
It's great to just get hooked up with a guy like Bo. He's done all the work for you, and his predictions have certainly been uncanny. He really has this stuff down to a science, and it's fascinating to listen to you and have you on. I really appreciate it, and hopefully we can do this again before it all unfolds. Thanks very much for joining us, Bo.
No problem, Mike. I appreciate it. And just to kind of finish, with a 42-year cycle finishing here, off 42-month cycle off that gold top, we might really want to watch what happens as early as even tomorrow or into the start here of March, because I think we might have some exciting times ahead.
That will do it for this week. Thanks to Bo Polny of Gold2020Forecast.com. We'll have a link to his page from this podcast interview. Again, it's Gold2020Forecast.com. Check back next Friday for our next weekly Market Wrap podcast. Until then, this has been Mike Gleason with Money Metals Exchange. Thanks for listening, and have a great weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes for answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds. Call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by between 7 a.m. and 5:30 p.m. Mountain Time, Monday through Friday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.